India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome. You are with us. This is Bazaar Morning Call and we're coming to you live from the CNBC TV18 Motilal Oswal studios. The smiles are wide and bright and you've guessed why. It is a Friday. I have with me, as usual, Nigel D'Souza, and today we have Mangalam joining us bright and early on the show as well. Hi, guys.
Bright and early. It is Friday, but, as long as the weekend is, this day is equally long. So let's get done with this, and then we have a 3-day weekend.
Long weekend coming up, so I'm really looking forward to that, and beautiful weather here in Mumbai. Little bit of a drizzle.
So long as you're in Mumbai, it's good. Don't dare to try to drive outside of Mumbai because it's a long weekend.
Everyone's going to
all the highways will be jammed.
I did it last week and I said, let's do it before the jam comes in.
But ahead of the curve, right?
Let's get straight to the action, Sylvie.
No, absolutely. So let's, dive right in and look at the cues that we are dealing with. Now, in terms of the global setup, it's a bit of a mixed bag. That's what we've got going. US markets, they were building on gains overnight, and that's become a bit of a pattern over there as well. So again, it was the S&P 500 and the NASDAQ inching higher, 0.2%, 0.3% higher. And the talk yesterday was all about wholesale inflation. Remember, consumer inflation numbers came in on the day of the Fed meeting announcement, and they were quite benign. And yesterday, the PPI numbers that came out, they were actually looking quite okay as well, because there was a decline of 0.2% on May PPI versus estimates of maybe a 0.1% sort of an increase. That triggered a bit of a happy move in the equity markets, and an even bigger, happier move in the bond markets, because look at what's happened to the US 10-year. It's been sliding for the past couple of days, and yesterday it came down to 4.2%. So that's a massive drop, 8-9 basis points drop in yields in a span of 2 to 3 trading sessions. So that was good news, and largely that kept fueling the momentum on the equity side as well. For us, another problem area actually, which is why I said it's mixed hues today, is oil prices, because oil prices have been ticking higher as well. That same inflation data perhaps leading to hopes that at some point in time, if not immediately, but later this year, the Fed will cut. And this coupled with the fact that there's expected to be higher demand in the US summer driving season, that's leading to an uptick in prices, and Brent is now approaching 83. The gain for this week is already 3.5-4% on Brent prices. That's a red flag, and that's a cue that we need to be a little wary of. I just want to quickly talk about the setup back here at home, and here the market's pattern has become, a bit of a start high and then kind of grind down. Yesterday was a better day because yesterday we managed to retain a fair bit of the gains. We ended with about a 75-point tally on the Nifty, which wasn't too bad, though the market couldn't once again couldn't retain itself at the highest level, and it was about an 80-point slide from the peak. The Nifty originally was obviously taking aim at 23,500, but that wasn't to be. Anyway, the action is more about mid caps, and that's really showing up in the weekly tally. Look at the way the small cap index is moving. This is index level, by the way. Mind you, stocks obviously have done much better. 4% up on small caps already, 2.5% up on mid caps, whereas the Nifty is just about 0.5% higher, and banks have failed to fire. That's been the other sort of trend from this week. Let's see if Friday can break that pattern or not. But that's been the setup. FIIs, they were once again in sell mode, so we're not getting any consistent buying from the FPIs. There was one day in the middle of the week where there was a nice big chunky buy figure. But again, yesterday was about 3,000 crores of selling, and domestic institutions didn't buy too much either yesterday. So the institutional flows put together were on the negative side. Today, apart from, of course, all the individual, mid-cap level news flow that we'll track, the big corporate developments to track as well. So that should keep the market fairly excited. Vodafone Idea managing to get more investors on board after that follow-on public offer. Now they've done a preferential placement, and it's a pretty large sum, 2,500 crores is what they're raising, and marquee investors coming in, Nokia and Ericsson. So we'll talk about this as we go forward. And then Nigel's been telling us, of course, on Ambuja, the big news from yesterday. They've gone ahead and bought a private cement company. I think it's Hyderabad-based, right, Nigel?
Yeah.
And I guess the value of the deal, the ambitions of that group, I think it's going to be a talking point as well.
Well, that's right. A couple of factors in terms of the global setup. One is the dollar index. It firmed up overnight. It was up by close to around 0.5%. It's cooled off a little bit, in the last couple of hours or so. And the Bank of Japan's decision. We already heard from the ECB, we heard from the Bank of Canada, and we heard from the Fed. Now all eyes on the Bank of Japan. But, it seems for our own markets, the Nifty is making a bit of a meal off this 23,500 odd mark, because the last few sessions we're going to that in that vicinity, and from there we're coming off. So around 23,400 to around 23,500, almost every day we've gone out there. If you want to look at a positive, at least yesterday we came off the high point of the day, but that was relatively lower in comparison to what we have done in the past. Even for the Nifty Bank, it's going to around 50,250, 50,300, and from there, well, it's coming off as well. So both those two remain the crucial marks. On the Nifty, 23,500. On the Nifty Bank, 50,300 going to be crucial marks. What did the FIs do yesterday in the F&O market? Well, they added some long positions in trade yesterday. They added close to 27,000 contracts odd, and they covered close to 18,000 short contracts. And if you look at their positioning as of now, the FIs, yes, they're net short by close to around 35,000 contracts, while the clients, well, they are still net long, but they've come off quite considerably from the recent peak itself. If you pull up the previous plate, that will tell you the picture. That the bulk of that short covering has taken place, because at one point of time, that number was more than 3 lakh contracts on the short side. And on the client side, at one point of time, you had more than 3 lakh contracts on the long side. So some unwinding is what we've seen, some short covering as well is what we've already seen. And just take a look at the short positioning. It was at around 87%, that bar chart will tell you the picture. And from around 87%, it's gradually come down. And now, in fact, it's come down to around 54%. So now they're only mildly net short on the index. Moving to the, the stock futures, we have been making this point. So on the index, they have been, it's been in a bit of a range. Short covering taking place, longs getting unbound as well. But on stock-specific action, the FIs and the clients, both of them, well, they continue to remain their net long bias. So stock-specific action should continue even today. Levels that we're looking at, 23,500, as I said earlier, that's the important level. 23,200 is what we have defended. But if that breaks, then all eyes will be on the 20 DMA. So these are the crucial marks. The big cement deal that was announced overnight, Ambuja Cements going ahead and buying Penna Cement, 14 million ton plant. Good deal for Ambuja Cements because they're using their cash. They are going ahead to around 140 million tons. For smaller companies like Sagar, NCL, Orient, India Cements, we could see a positive reaction out there. But will this reduce the dominance of Ramco and Dalmia? Well, that'll be another interesting point to track today. We'll tell you about that in further detail. But let's see on this Friday whether the bulls can take the Nifty and conquer that 23,450, 23,500 mark. But Mangalam, what else?
Take that point, Nigel. The big cement deal perhaps would be the only event that we are watching out for right now from an industry standpoint, from a specific standpoint, because all major events, we had the election, we had, of course, all the ministers getting their portfolios, and then even the FOMC meet outcome, all the major events until the budget are for now out of the way. And that's exactly what the market is reflecting. And the India VIX as well is reflecting that. Before the FOMC meet, it was closer to around that 15 mark, and it's now down to around 13.5, which is a more normalized range for that index. In the last 4 sessions, like you pointed out, the Nifty crossed that 23,400 mark 3 times and couldn't close above it even once. And why is that? Because there is a fair amount of call writing at the 23,400 mark. And these are options that expire next Thursday and the Thursday after that. On June 27th and June 20th, we have 32.5 lakh shares on the 23,400 call on the Nifty. The week after, nearly 14 lakh. And this is 14 days in advance that we're talking about. Similar is the case with the Nifty Bank. In fact, in the last 9 sessions, it's crossed the 50,000 mark 5 times, closed above it just once. And now there as well, call writers have understood this pattern. And as a result of which, June 19th, which is next Wednesday, we've seen on the 50,000 call, there are 25 lakh shares outstanding. And on the June 26th options expiry for the Nifty Bank, that will also be the monthly options expiry. We have at the 50,000 call, nearly 8 lakh shares which have been written. So while we're talking about resistances, the important part is that in the last 4 sessions, the Nifty hasn't closed below 23,200. And even in the last 5 sessions, the Nifty Bank, while it hasn't crossed that 50,000 mark on a closing basis, it hasn't closed below 49,700. So while there are resistances at upper levels, there is an equally strong support at lower levels as well. And when that happens, portfolios feel a lot better because the broader markets do a lot better as well. From June 4th levels, we've seen near double-digit gains at an index level for both the mid-cap and the small-cap indices. They are at record highs, and individual stocks have gained anywhere between 20, 30, 40. Some have even doubled from June 4 levels. What could be the joker in the pack? I'm looking at the Nifty IT index. Why is that? Because you said that the dollar index firmed up a little bit. IT and mid-cap IT stocks did well in yesterday's trading session. The US yields have cooled off, And if you look at, what's happening in the US IT stocks as well, the US tech stocks, the previous couple of days, we saw a big move on Apple. We saw a decent move come by on Oracle as well. And now Adobe yesterday was up 16% on strong results and good guidance. So the IT pack is one that could actually be a fly in the ointment move on either side, because that's the one thing which we don't control right now. That's more global facing. For now, domestic, everything is under control.
Well, that's right, Mangalam. And yesterday as well, we had given IT, the Nifty IT index as the sector of the day to watch. And just one more stock, Emphasis, if you saw, that stock ended at the high point of the day. Besides being part of the IT related stocks, it has a rebalance that's taking place as well, because there was the stake sale that took over there, which increases the free float. So that's one of the stocks as well we should keep. FTSE as well as MSCI, we're seeing a reject.
Fair point, absolutely. Mangalam, I don't know what's happening with US IT. I just know that Mr. Elon Musk is going to go home with $56 billion. On a side note, that pay package was approved by shareholders. I mean, it's still, I think, in question in the courts. But shareholders said, yeah, sure, you want $56 billion? Go ahead and take it.
To be fair to him, he had asked for a much meatier chunk, say, 10 years ago. And he managed, they were milestone-based payments. He said, if the market cap crosses a certain level, say 5 years later, I will take home this much money. And that time, everyone thought that, okay, this is not possible. So, yeah, let's go ahead and approve it. What went ahead is that, the market cap crossed to the level, Mr. Musk was seeing it. So, one of those visionaries of, Silicon Valley right now.
Absolutely, no taking away from it. Okay, let's get started with the equity call of the morning. Chris Wood of Jefferies says that some changes will be made in the India long-only portfolio. He says an investment in GMR Airports infrastructure will be introduced with 4% weighting, and this will be paid for by reducing the investments in ICICI Bank and HDFC Bank by 1 percentage point each, and by shaving the investment in Axis Bank by 2 percentage points. As for the Asia ex-Japan long-only portfolio, Chris adds an investment in GMR Airports infrastructure will also be introduced by removing the investment in HDFC Bank.
Interesting one, removing the investment in HDFC Bank and adding GMR Airports. Let's get you some money market views as well. Lakshmanan V of Federal Bank says the week started with political uncertainties in the Eurozone leading to the rise in the US dollar index. However, he says gains moderated due to lower than expected US inflation numbers for May, coupled with higher than expected job loss claims data. He says incrementally, crude oil prices surged due to tensions in West Asia, and is optimistic that global oil demand outlook for the current year as well. He adds, post-election outcome, dollar-rupee exchange rates saw some stability, expects the USD-INR pair to trade in a range of 83.30 to 83.70 in the coming sessions.
On bonds, Lakshmanan says the Indian bond yields declined marginally as US Treasuries traded lower after softer than expected US inflation print boosted bets of rate cuts. He says India retail inflation eased slightly in May to 4.75% from 4.83% in April, aided by supportive base effect and lower core inflation. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 6.9 to 7.05%.
Well, a lot of stock-specific action to track for you. Get at that in just a bit in our special Top 10 segment. But let's run you through the list. We look at Ambuja Cements, Vodafone Idea, Suven Pharma, Signature Global, Puravankara. All of them will be reacting to positive news flow. Add to the list Nalco, Havells, L&T Finance, Senco Gold. While on the flip side, Dhampur Sugar Mills could be reacting to negative news flow.